Hi everyone, Happy New Year and welcome to the first Eco-Investment update of 2015. Warming myself by the fire these cold winter days. Right, it was 72 degrees here last week in California. 50 degrees is cold for us. You know, I have a lot of people write me week in and week out. They say, you know, it's really great that you've been so positive and unyielding in your belief that the market is going much higher, and every week it seems to bear it out. I think about you, Rosie, when the days that the market gets slammed 300 points, or you have 4 days in a row where you lose 600, 700 points on the market, and I think to myself, Rosie, you're going to get yours. Here you go. The beginning of the end for you, and lo and behold, what happens? We turn around and we keep making new all-time highs. How can I be so sure about what the market's going to be? I'm no genius. God knows I'm not a genius, but I've had 35 years in the investment world, and at one time handling millions of dollars at a crack trading currency and things. I know a few things about what it takes to make money in a market. And if you ask me, which some people have, what's the number one thing you need to how to become a great investor? The number one thing is you have to have an idea in your head before you begin. In other words, my idea was, well, the Federal Reserve of the United States, in light of the tremendous recession it hit as a result of the real estate collapse in the mid-2000s, took interest rates down to virtually zero, till we've reached a point today where banks don't want your money. You know, banks are starting to charge their big corporate customers money, starting to charge them a fee to keep their money on deposit. And all around the world, yields are beaten down lower and lower and lower. So my idea was, in the face of that, well, you know what's going to happen in the face of those falling interest rates and zero interest rates? People are going to be scrambling for a place to make money. You can't make money in the real economy. It's exceedingly difficult. It's even harder now in the face of collapsed oil prices. Okay, you're about to see Texas, North Dakota, and all these places go through a gut-shriveling downturn as reality bites of $48 a barrel crude oil. Sure, we're going to have some type of reflex rally or something like that, but make no mistake about it, there's way too much oil production in the world, way too much. And all that they succeeded in doing with maintaining high oil prices, OPEC, and all, was create alternatives like Tesla motor car companies, solar panels, solar power generation, newer and newer innovations. You know, that's the beauty of the capitalist system. It works. But in the face of all of that, where was money going to go over those years when the Fed lowered interest rates to zero in 2008, 9, 10, 11? You know, we're up through 2015 now. And you would think with the economy, quote, the job creation number for December was like 240,000 jobs. But the wages went down month to month. One of the rarest things that happens in an economy, especially our economy, is month over month a drop in the average wage in this country. That tells you what? That the high-end jobs are being wiped out and they're being replaced with lower and lower end jobs, lowering down the wage scale, lowering down the standard of living. Be that as it may, you know, when interest rates are zero, that fund money, that mad money is going to go somewhere. All that excess capital, and the place it finally settled on was not real estate, not precious metals, not farmland, not most commodities. The place that it settled on was common stocks in the United States stock market. Around the world, most stock markets, with the exception of, say, Shanghai and China and the United States, have had a really tough go, okay? But our stock market continues to roll here and move higher. Why? Because my working theory of low interest rates are creating this stock market bubble, and until such time as the Federal Reserve raises interest rates several times, That bubble will be continue to be built to a very dangerous level till it finally reaches the point where it's got to be popped with catastrophic results and a massive withdrawal or massive decline of capital, a horrendous destruction of capital, and then we'll really be in this stew. Not only will we have no interest rates to be paid on anything, but we'll have a lousy stock market for years to come. But that's that time. This is now, and the game rolls on. The number one thing you need to be a great investor is you need to have a working idea of what you expect. So as things go along, like my theory about low interest rates creating the stock market bubble, every time it makes a new high in the face of lower interest rates, I feel more and more sure that my working thesis, my investment thesis is correct. Okay, and that's really the only thing that I think about from day to day. What are interest rates doing and what is the Federal Reserve doing? Well, they're scared out of their pants down there in Washington, I can tell you that, because there's no more ammunition left in the magazine. They've shot every shot they have to shoot in that in their weapons against deflation and stuff. So stay tuned, stay long, stay strong. Thanks so much for watching, everybody, and have a great 2015.